down for every one up. Well, as promised, we, on our 26th birthday, have invited a 26-year-old, young, vivacious, inimitable Samir Arora. Samir, great to have you with us here, and thank you for being part of this journey all these years.
I'm sure I was there on day one also, but I don't remember. Please check.
No, we will check, and we will then and now. We'll do a then and now. So, Samir, it's a bad-looking screen. I mean, you know, and I was just looking at this Fino Bank, right? There's got this RBI license. Stock is down 30%. Stock is down 14%. It just, I mean, you know, you see that as an example of how bad it is.
You know, I had tweeted that on my birthday, the market went up a lot. And now we are talking about your birthday or your...
आपका birthday साल में 2 बार कर देंगे फिर अब. That is the effect.
So right now it looks like somebody is giving up on India in terms of selling. I guess I would call it indiscriminately, because there is nothing new that is happening for, okay, that what you're showing is another example. But I'm saying in general, this looks more like dumping. Now many people say that some of the PMSs, which, you know, were exclusively or mostly into small cap stocks, are shutting because they have been doing badly for 1 or 2 years or 2-3 years. Not sure what the story is. But in general, today doesn't look like a day from which you should draw a conclusion that somebody is seriously looking at it and has decided after the when the year is about to end that this is the time to sell. It looks like somebody walking out of frustration, being upset with whatever, and maybe wanting to buy some AI-related stock related to OpenAI. I hope he does that instead.
Samir,
and not Google related.
Google. And everybody, basically, that's the problem, right? Everybody seems to be on one side, which is selling. Promoters, sponsors, corporates, foreign investors. And it is the SIP money which is keeping things afloat for now.
But SIP is also ultimately the same public's money. So you can't say public this side. And you know, all this thing about the promoter selling, we do see, not literally directly the same guy who's selling today coming to us, but broadly we can see from the inflows into both PMS and mutual fund that these are the promoters who have sold, maybe not today, but in the last X number of months, because they have set up family office, or they've set up, or they've got some advisors now. So that money keeps coming back and forth. It's not so blatantly just one way in that sense. But I think it's more end of year, somebody wanting to give up, because this doesn't look like across the board everybody's decided today morning that when everything else is broadly okay, there's no extra incremental bad news that you have to hit literally every stock down 3-4%, 2-3% kind of thing. Therefore, I've seen this for too long. We have to give it a week or two, or if somebody thinks that they know something and we don't know, mostly that is not the case.
There is no hidden truth in that sense.
And particularly at a market level, you can say that for some stock that
correct.
Somebody has some information, but what do they have about the market?
Although, Samir, one thing I'll tell you, this growing feeling that we are kind of stuck, that nothing is moving. You know, RBI has cut, but you know, beyond that.
So all the things that we could have done, we means the government or the system could have done in terms of other than just directly buying stocks, they have done. And therefore, it may take some time to feed through, but these things are not wasted. You can't say that, oh, when they cut the rate that day, the market didn't go up, or the next 2 days, therefore what a waste. Now we need to do something more specifically for that. So if you've cut these 3, 4, 5 things, and in general, the market has corrected, and the rest of the world is not falling apart, I still can't imagine that somebody is using money from India to fund an investment in some other market. Because the Indian market in general has done well over time. And this year it has massively underperformed. So it's very unreasonable to think that somebody is selling a market which has underperformed by 28-30%, which means broadly, and if they buy some moving stock in that other market, it is up more than 30%, since their index is up 30%. So that means they're already giving a 50-60% or 40% spread in selling some Indian stock and buying some whatever they are doing with this money. Doesn't
Yeah, but although in that during the course of that underperformance, maybe the underperformance may have been caused by that that India was used because it was very expensive. It was used as a funding market too, and this is a point which Neelkant was making a couple of weeks back, etc. Now this SIP.
I don't think this funding business works. For just to give you the weight. So if you're a global fund manager, then India's weight in that will be plus minus, say, index weight, which might be less than 1%. Now, if you think that because obviously they're not making it zero, because if you see in aggregate, they have sold till, I think 1 or 2 days ago, $17 billion year to date, in which January alone was 10 billion. That means from February to today, they have sold $7 billion on their own aggregate AUM of, say, 800 billion. So they have sold 1%. So what I mean is, if somebody's weight is 75 basis point and 1%, and you suddenly feel that you have to buy some other market, it's highly unlikely that you do it, that, okay, I will reduce this 10 basis points here and buy Korea with it. You can fund it if you so desire with the balance 99% that you have. So don't call it a funding market. Somebody doesn't like it. They have lost and they are out kind of thing. But hardly that suddenly 1 day later, 10 days. Funding means that 3 months later, they'll come back with that logic. I think people who are selling and people who are buying will buy. Not all the time is it a movement from one market to another.
Samir, hi, afternoon. Is there a reason to buy Indian markets? You know, we spoke about the underperformance versus rest of the emerging markets, 25, 30%, etc. But now looking ahead to 2026, do you think
There are many, many reasons to buy. First reason is to look at how good our market has been since March of this year. Since March of this year, the Indian market is up maybe 15, 20%. Mid-cap stocks are up maybe 25%. If you look at it from October 1, Indian market has outperformed the United States even till right now, even including the US dollar. I mean, Indian market in dollars. You can see right now, you can show MSCI India from, say, September 30th, which means for the current quarter, and compare it to China, compare it to emerging market index, compare it to S&P 500, compare it to NASDAQ. India has outperformed. What I'm trying to say is that although on a yearly basis it looks bad, but if you look at it from, we are not saying look at first quarter, we are saying continuously from March 31st to today or March 15 to today, or you look at it from this quarter to date, which means it has changed a little bit. Now, if you look at it in absolute, from an Indian investor point of view, that, oh my God, what he could have done on December 31, 2024, he couldn't have done something much different by buying something else. Because unless you say an Indian investor would have sold India and bought Korea, he would have, we are talking about, buying equity or buying debt. So even till right now, I can see the 500 index is up 5%. So it's bad, but it's not that he's bleeding to death. And if he had Nifty, it is up some 9.9%. It has more or less, the sad part is that other markets are doing very well. It is not so much that a correction in Indian equities is in line with what corrections happened when we used to have corrections, which is the market falling 10, 20%. It is depressing in that sense that the other guys are doing well, but it is not so wildly bad that people should feel, oh my God, why did we ever think of equities?
Hi, Samir. Good afternoon and good to see you. An interesting point, right? So quarter four hasn't been so bad. We keep talking about India underperforming, but actually for quarter four, we're pretty much in line or maybe better than a few markets.
Outperforming, yes.
So that's good. And the sector actually that's outperformed even more has been the tech index, which has been an underperformer for the first 9 months of the year. So India's outperformance within the basket, actually tech has done well. How are you all feeling about tech? If I'm not mistaken, from the low that we saw towards September end, I think the tech index, the Nifty IT index, is up close to around 17 to 18% or thereabouts. How are you all placed on
Maybe not
Indian tech companies?
17% because it is still down 14-15% year to date. No, sorry, 11%. Maybe it is. But no, we don't like Indian IT sector because we are thinking of the fact that all these guys, for example, Anthropics is about to do an IPO at a $350 billion valuation. And if you look at the interviews that those guys are giving, and I guess the US world is accepting it, because if they are really serious about a $350 billion valuation, that many of these jobs of Indian IT guys are gone. We have met IT staffing companies, and all these staffing companies, you can call these, there are only 2 listed companies, and ask them what they think of the demand of people in the Indian IT sector. Actually, if you look at it, that if you look at the GCCs, and if you see the growth in GCCs, that alone shows you how much, even without AI, the GCCs are effectively doing things which in theory could have been done by the Indian IT companies. So even ignore the impact of AI. The fact that the global companies are confident enough to set up GCCs in India and have now so many people there shows that some demand which theoretically could have gone to the IT guys has come here. So we are not buying IT. I'm talking in general. I will buy IT only when I can see that the either I over evaluated or whatever this thing, the impact of AI. I think the impact of AI is very big.
Yeah, no,
Negative.
negative. Yeah.
And big. Because you can see the other side. You can't have it both ways, that the Anthropic kind of guys will give AI to enterprises, and they will have X revenue, and they will be valued at equal or more than nearly our entire big IT companies. But the IT companies will not be affected. But McKinsey will be affected, and McKinsey will fire their consultants, but IT guys will not fire. So as I've said, actually I've said it a year and a half ago, I do not believe the Indian IT companies' managements. I have never believed them for the last 25 years. I've invested in them, but I don't believe in them. Believe in them sense that they tell the truth, that they come openly and tell what is the situation. They only talk quarter to quarter. If some company has got an order from a company whose market cap is 350 million and they are getting orders worth billions of dollars, I just don't like or believe all this.
You know, Samir, the basic way AI, like for example, right, DeepSeek launched this new model, which they say is 25 times cheaper than ChatGPT, and it is as good as GPT. Now, very tough to say where value will finally settle at. All this is fundraising, etc. But adoption will happen. And the way many people are thinking about adoption is not from only IT services companies' perspective, but for this constant refrain that India does not have strong foundational AI, and maybe that is the reason why money is not come, etc. But AI will lead to basically productivity improvement, which is margins going up at the cost of labor, at the expense of labor.
Correct.
That is the basic kind of at a broad level, right?
Because I get all my knowledge out of reading books. I read a book called The Engine That Moves Markets. And basically the logic there is that it is not easy to know who the winners are in anything. For example, suddenly from OpenAI and its cohort of partners from Oracle to SoftBank to even Microsoft, suddenly now the Google cohort and its partners are doing well. And suddenly OpenAI is under threat that Google is doing better. So what I'm saying is according to that book, and there are some 100 examples in that which are enough for me. And even we can see it ourselves, that it is easier to know who the losers are than to know who the winners are.
Yeah.
And in any way we look at it, the losers are easy to see, that in big picture sense. The Indian IT, and particularly large Indian IT guys, are the losers. And now which fellow will get a better application, and which fellow will be able to use AI better, and who will be able to have a better model, that is more difficult. As of now, in front of us, it has moved from OpenAI to Google. And on the other side, Anthropic says that I have got so many enterprise customers. So it can't be both. No, that's what I'm trying to say. And if they are, we will learn with time. But I can't buy a stock only on the basis that We don't know about the revenue, but the rupee has weakened by 4%. That is very boring way to buy a stock.
Samir, once again, happy 26th birthday.
Thank you very much. And same to you guys. And even if you flip it,
No. Arey, you are, I'm not joking, you are one of the,
I
liveliest.
am experienced, not old.
Correct. So absolutely. That I agree. And wise. Thank you very much, Samir, for joining us. And thank you for being with us on this special day. We'll take a quick commercial break here.